What's going on, guys? Welcome back to BetterBull BetterTraders program. My name's Sam. Today we're going to be going over a quick video on Thinkorswim charts. Thinkorswim is the program that we use for our charting software. You can sign up for this through TD Ameritrade. It's one of their software programs. And today I'm going to be going over my charting setup that I do when I trade stocks. Today we're going to be going over mainly day trades, not swing trades. So it's more of a micro approach. And what we're going to be doing is throwing in any old stock. So I'm going to be throwing in Tesla. And I set this to my 8. What you can do is just click this and it'll link it to 8. And now when I go over here, 8 is also Tesla. So that's a pretty cool setup program they have right there. The other thing we're going to be going over today is our settings and our studies. So settings, we're going to start off first. A lot of these are preferential and you can go through those on your own time. For the most part, I'll just be changing the things that I change personally. So what I'm going to be doing is heading over to time axis, and I'm going to be changing the expansion area, which is the space in between the last candle shown. We're going to be doing this on both sides. All right, so now what we're going to be doing is going over to our settings again, and we're going to go over to the appearance of the candlesticks. I like to keep my candlesticks filled. It's also preferential. It does not change how you trade. It does not change how the stocks look. It's just the fill of the candles, and it's personal preference. The next thing we're going to be going over is our volume on the equities. So this volume graph down here and over here, we're going to be removing that. I don't use those when I day trade. This is just personal preference as well. You know, you can always use whatever you feel comfortable with. But for the most part, we're going to be going over a simple charting program today. And we'll go more extensive as we go. I'm going to be getting rid of this icon right here, the customizable grid. So now that that's gone, we're all set to go into our studies. So I'm going to be going over to the studies and adding in exponential moving average. And what this does is it shows the average price from a certain period of time. So we're going to be doing the 9-day and the 21-day. And you're going to want to make sure you change the color on one of them so that they have a different appearance. So you can see there's both different. You don't want those to be the same color. And now what we're going to be doing is moving this to the 1-day. When I day trade, I typically will throw up the S&P 500 and see how the stock is reacting in accordance to the overall market, which helps on various trends. So basically what I'm going to be doing here is you can keep this exactly the same over here if you'd like, or what you can do is use the same stock that you're trading. So I can go back to Tesla and I can take the moving averages again. And then this time I can go to 21 and 34. So this gives you a more broad trend. And it'll see, you know, if it breaks one of these support lines, what could be the next possible support that it holds up. And I forgot to change the color, so I'm actually going to do that right now. So basically what this will do is, you know, say if it breaks one of these trend lines that you're looking at, what is the next possible place that it could stop at? And that's pretty important when you're day trading, because you want to know when your exit and your entrance point is, or at least give you a better idea of what is a good point to enter and what is a good point to exit. So I know a lot of people will throw on a bunch of different strategies and indicators. I know some people use VWAPs. I don't personally use VWAPs. I know some people use DMI oscillators. This is one that I have used in the past. It's a good trend. What it does is it just shows the overall direction that a stock is moving at the current time period. So as you can see, as it's going down, it's red. It shows that it's red. As it comes back up a little bit, it'll show you that it's green. And what this does is it basically will say, here's a good idea and here's a good suggestion of when you should buy and when you should sell a stock. So, you know, if you're looking to buy a put and you see this goes to green, you're looking at it, you're waiting. This would be kind of a fake out. You might want to wait until it goes a little bit lower. And you can determine that based off of, you know, support and resistance.
But basically, once you can see this thing breaks the overall trend, as well as the moving averages cross, it's a good indicator for you to get in on a day trade possibly. And you can make your put here. And obviously, if you had that, you would have ran a 70-point trade on Tesla nearly. So, and that's huge gains. So this can be a lucrative strategy. It's all dependent on what you use. I don't typically use it because I can, once you're used to the DMI oscillator, you can almost tell just based off of looking at a graph. But other than that, there's really not too many other strategies that I would suggest using yet. Once you get more comfortable with them, you can use more. You can throw Bollinger Bands on there as well if you like. It's all dependent on what you like to use and what you know how to use. But for the most part, with our beginner traders, we like to keep everybody on a relatively basic charting setup. We don't like to confuse anyone with a bunch of equations. That's only going to hinder your trading performance. So I typically keep my chart relatively simple. Even when I have the ability to use others, I think simply a moving average and knowing the supports and resistance is your best friend when you're trading. The next thing and the final thing that I'll be going over is I like to use the level 2. So level 2 just shows the current bid and current ask. It's a weekend right now, so this isn't updated live. But when it is live, this will show all the way down here, and it'll be able to give you a rough indication of the strength of the people who are buying, the people who are selling. So you can use that as well. If you're trading the stock, the same stock, so if you have Tesla and Tesla, there's no real point to have level 2, but you can throw it on there. I mainly only use level 2 on both sides if I'm trading Tesla, for example, and I'm trading the S&P 500 on the other side. So it's all dependent on what you want to do. It just helps you give an overall trend. If you're still using Robinhood charts, you're at a severe disadvantage, and I think you should definitely invest in getting a legitimate charting program that'll help you be able to see. It's just kind of your eyes in the sky, and you want to be able to have that ability to look at the overall trend and not on a bland Robinhood chart or similar charts. So there's a lot you can take out of this. We're going to be going more into charting and the advancements of how you can read a chart and how you can use different indicators to help you when you're trading. But today we're going to keep this relatively simple. For the most part, you can get the job done with this setup right here. So I thank you guys for watching. We're going to be going into more videos soon, and have a great day.